History books love a David and Goliath story. They tell you that in 1911, the American government achieved the impossible, breaking ruthless, omnipotent John D. Rockefeller. Standard Oil's dissolution was framed as the ultimate victory over corporate greed. But history books are often for the naive. Follow the math, and a terrifying truth emerges. The government didn't destroy Rockefeller. They handed him the ultimate money printing map. By forcing the breakup, the Supreme Court inadvertently unlocked the 20th century's greatest structural arbitrage. He walked into the courtroom a billionaire and walked out untouchable. Today, we look past the political theater and decode the financial conspiracy that made Rockefeller richer. By the 1880s, Rockefeller was the oil industry, controlling 90% of US refining. His strategy was vertical integration driven by algorithmic efficiency. If a refiner refused to sell, Rockefeller would buy pipelines, outbid them on railway rebates, and cut prices below cost until they bled out. But dominance created a severe structural bottleneck. As a singular giant, Standard Oil was too visible, too hated, and legally restricted from expanding freely. The trust was suffocating, facing constant lawsuits. Rockefeller needed a mutation, and the US government was about to give it to him. In May 1911, the Supreme Court ruled Standard Oil a monopoly and gave it 6 months to dissolve. The public celebrated. The politicians took victory laps. Now, look at the actual data. The decree broke the monopoly into 34 independent companies. However, the court did not confiscate Rockefeller's property. Stockholders received proportionate shares in each of the new spin-offs. Because Rockefeller personally owned roughly 25% of Standard Oil stock, he instantly became a major, multi-million shareholder in all 34 new entities. This is where the magic happens. As a single monopoly, Standard Oil's vast hidden infrastructure was heavily suppressed by political risk. But once broken apart, the market was forced to price each asset class individually. Consider the geography. Standard Oil of New Jersey, later Exxon, got refining and international marketing. Standard Oil of New York, later Mobil, took the North Atlantic. Meanwhile, Buckeye Pipeline retained absolute control over the literal, physical transport of oil. By separating processing from logistics, the market value of these individual parts exploded. Investors realized that even if they didn't buy oil from one baby Standard, that oil passed through a pipeline owned by another baby Standard. Rockefeller's personal net worth skyrocketed from $300 million to nearly $1 billion. But the arbitrage went far deeper. 1911 coincided with a critical macro shift: the birth of the internal combustion engine and mass production of the automobile. Standard Oil had been a kerosene company, lighting lamps. Gasoline was a byproduct. But as the Model T took over American roads, demand for gasoline exploded exponentially. Because the baby Standards were now legally independent corporations, they could raise capital, issue public bonds, and aggressively capture this new automotive market without triggering further monopoly investigations. Furthermore, the breakup allowed for masterful stock manipulation. Public confusion over the true value of pipeline and processing companies caused stock prices to fluctuate wildly. Rockefeller's syndicate quietly used their immense banking liquidity to buy up depressed shares of the most profitable spin-offs from panicked retail investors, consolidating an even tighter grip on the nation's energy grid. By the 1920s, the separate baby standards were competing on the surface. But underneath, they were pumping profits into the exact same financial repositories, the Rockefeller family trusts and Chase National Bank. The extinction of the trust was simply the birth of the modern corporate cartel. John D. Rockefeller understood a profound law of power. True control does not require a visible throne. It requires the ownership of the system's infrastructure. By forcing the breakup, the government removed his visibility. They transformed a vulnerable monopoly into an invisible, highly resilient ecosystem of capital that continues to shape global politics to this very day. True wealth is never found in emotional narratives of victory or defeat. It is found in the clinical, mathematical structures operating beneath the surface. Invest in your mind. Protect your time. This is Wealth Wisdom Man. See you in the next chronicle.